Hello and welcome to a short presentation that I'm calling The Real Easy Way to Easy Street. This presentation is focused on the basics of saving and investing and covers a few very important subjects. Now I'm going to lump everyone into one of two groups. One group may find this presentation helpful and informative, while the other will probably get bored very quickly. The group this presentation is not for is investment pros or get-rich-quick types. Those looking for hot tips or stock picks or cheap swampland in Florida, real estate opportunities, or whatever it is they say in those late night infomercials. Now, I'm not saying get rich quick types are bad. I'd like to get rich quick myself, but that's just not what this is about. This is also not for traders. There's a huge difference between investing and trading. Trading requires sitting at a computer all day, analyzing charts and making a lot of quick moves in and out of the market. If that sounds like a pain in the ass or very complicated to you, good, keep watching this video. You're the person I want to talk to. And investment pros are already going to know all this and certainly more, so if you're looking for a complicated dissertation on the macroeconomic policies of an immersive global infrastructure, then you should probably keep looking. Who this presentation is for is people of all ages and incomes who want to retire someday but don't have the time or desire to analyze financial documents or read the Wall Street Journal each morning. This is for kids out of high school wondering what comes next, and it's for a 30-year worker bee who has some money saved up but is wondering if it's going to be enough. This is a very important subject because the latest statistics show that most people are severely behind in their savings or ability to retire. They don't teach this stuff in high school. I didn't know about this stuff until my first job after college when they told me I had a 401k. I was like, cool, what's that? My mother's at retirement age now and she can't afford it because she never created a retirement plan or a retirement account. I wish I had been more involved back when I finally learned what a 401k was, because perhaps today she'd be in a better situation if I had known then what I know now. My goal is to try and help whoever's watching this video help you avoid the same fate. On the next slide, I'll give a short overview of what I intend to cover, so you can determine if you want to stick around or move on to something else. Don't worry, I won't get offended if you leave. Oh, and one more thing. I'm not providing any direct financial advice in this video, and it's for informational purposes only, so you can't sue me for any reason. Alright, now that we understand each other, here's what I'll be talking about in this video. First, I'll try to answer the question you should be asking yourself right about now, and that's, why should I listen to this jerk? Assuming we get past that, next will be asset allocation, what to invest in to meet that allocation, how and when to invest, followed by web tools, and then a list of tips and tricks, important bullet points that don't really fit anywhere else in the presentation, but that are too important to leave out. There are tons of people on the web and on TV spouting all kinds of financial advice, so why should you listen to me? Do I know any more than the folks you might see on CNBC or read in Money Magazine? No, I don't at all, but I do have some potentially interesting qualities. First, and this may seem like a bad thing, but I'm not an advisor. I'm a regular person just like you. I didn't come from money, and I don't have any financial gurus in my family. I don't have a brokerage firm telling me what I should tell you, thus I have no reason to steer or lie to you. Now before I get into trouble, let me say that I'm not here to bash advisors. Advisors are great for things like college funds and estate planning and things like that. By the end of this presentation, I think you'll see that you really don't need an expensive advisor for basic investing. Second, I have some experience. I've been investing for close to 15 years. I've invested in good times and bad, as bubbles inflated and when they popped. And that leads me to number 3. I've lost money. That's also a good thing because I've learned a few things from my mistake. The folks on TV shouting advice don't normally tell you how they've lost money, or when they do, they quickly tell you how they got it all back the next day by some miracle trade. I admit I've made more than a few costly mistakes, and I think what I've learned can help you avoid them. And lastly, watching this video is 100% free. And come on, what are you going to do? Watch another Lady Gaga video? I'm not trying to sell you anything. I'm not trying to get your email address or have you visit some website. Nothing. Those free investment newsletters you might receive, they're trying to get you to subscribe for a fee. Some brokerage firms try to sell you whatever investment their bosses are telling them to sell because they're getting a cut of those sales. I really am doing this only because I wish someone would have told me back in the day. I mean, they didn't even teach me how to balance a checkbook in high school. I'm lucky that my company put me in a 401k when they did, and over the years I've managed to invest well enough that I'm pretty sure I'll be able to retire comfortably when I want to. Other people I know who haven't figured this stuff out haven't been so lucky. Oh yeah, before I forget, I think by now you've figured out that I'm going to talk about investing in the stock market as the easy way to Easy Street. Some of you might be turned off by that, thinking that the stock market is a scam or only for people that are already rich, or that it's really confusing or hard to do. I hope to show you that's not the case. And consider this, by not investing, you would really be doing yourself a disservice. Here's why. Back in the old days, the days when my parents were working, they thought that working hard and putting aside a few dollars here and there was going to be enough to retire on. They were wrong. Unless you have a really high-paying job, just letting your money sit in a bank account doing nothing is not going to let you retire the way you want to. Unless, of course, you want to retire only a few days before you're taken to a state-run old folks' home. The biggest problem to having your money sitting and not growing, or growing at a very slow rate, is the monster, inflation. Look at the price for a gallon of gas. $4 now compared to 79 cents or something when I got my first car. A 72 Chevy Nova, by the way. That dollar I saved way back then couldn't buy me enough gas to get back to the bank to get more gas money. You need your money to grow at least by the rate of inflation, and a jillion studies have shown that the best way to grow your savings is in the stock market. That includes all the ups and all the downs. It's a long-term thing, which is why I say this presentation isn't a get-rich-quick scheme. Simple fact, if you want to be able to retire, to provide for your family or whatever you want to do, you're going to need to invest, and invest wisely. You don't want to be one of those people that turns 65 and says, I worked and slaved my whole life and I got nothing to show for it. You've been hearing about how Social Security may change over time. You can't just blindly bank on the government taking care of you. You got to take care of yourself these days. So, Section 1. I've read a few books on investing, and typically they start right in with what stocks to buy. That is not where you should start. When talking about investing, you want to think about asset allocation first. Asset allocation is how should I divvy up my investments to maximize profits and reduce risk. You know the phrase, don't put all your eggs in one basket. Asset allocation is about determining how many baskets you should have and how many eggs should go in each. There are a lot of online tools, a lot of them free, that'll help you determine your optimum asset allocation. This is not something you just do once and then wait 40 years and retire. You need to review your asset allocation every couple of years, because your asset allocation strategy should change as you change, as you get older or collect more assets or have children or whatever. I'll give specific examples of asset allocation in a moment, and the section on web tools will show you some good websites for this sort of thing. Don't worry, it's really easy. The reason for asset allocation is diversification. I know it's tempting to see some stock rocketing higher and want to throw all your money there, but that's just too dangerous to do with your retirement savings. You want exposure to lots of different companies in different industries and sectors. That way, if smaller US companies are all the rage one year, you'll have some. And if international stocks are screaming higher the next year, you'll have some of those too. Here are some typical asset allocation baskets and the ones that I think a well-rounded investor should use. A typical 401k plan normally has all or most of these buckets represented in their investment options. Large cap domestic, mid cap domestic, small cap domestic, international, emerging markets, cash and bonds, and finally, play money. Now this last bucket is important. This is where you can play trader if you want to. You'll be so far ahead of the game if you just create your asset allocation and steadily invest in it. But if you do want to play stock picker, if you want to try and catch that hot stock, you can. Just keep this bucket small. Unless, of course, you get really good at stock trading and are making money hand over fist. If you're just starting out, though, keep this bucket small, meaning don't put too much money into it, or don't use this bucket at all until you learn more about trading and have the time to do it right.